Hello, everyone. Mike Arnold here, co-founder, Path Trading Partners, along with Bob Iacchino here for the weekly stock sector overview. This is probably going to be shorter and quicker because my thoughts are generally the same for most sectors. There's only one in bullish mode right now, which is energy. So just a quick overview of everything, by the way. S&P, long-term sell. NASDAQ, long-term sell. Dow, long-term sell still. Russell, long-term sell. Russell, Dow, we do have some potential buy patterns, but they are a fair ways off. What I am watching for on the S&P, just from a macro perspective, in case you can't tune into the live streams, is this 62.5 key level coming in roughly 35.88. As long as we don't get the daily close below that, we have a chance for a bullish mode. We get a daily close below that. Then I'm watching for a retest of the lows from Thursday the 13th. All right. So that's where we sit with that. And any bullish mode would be short-term bullish mode. Remember, I'm pretty much in DEFCON severe mode just because of liquidity. So if we get a black swan event, then we could see we're still in possible capitulation mode, which means the conditions are there for a substantial sell-off. If we got a capitulation mode, then that would turn into a potential medium-term buy pattern. We don't have that yet, but we are in a critical area with liquidity. So I am on edge. For the people who watch the Weather Channel, it'd be like Torcon 7 or 8. With that being said, as long as this S&P does not close above that 62.5, that 35.88 level, I will continue to watch for some bullish patterns. We get the daily close below 35.88. I'm watching for the retest of the lows areas. By the way, just so people want to know for capitulation, it's below 33.80. It's below 33.80. So let's get back to those sectors. And if you want to know if we do have a sell-off and we do hit capitulation, you will have to tune in or watch the replay on the daily live streams. I will cover it there. So XLE is the only thing still in buy mode, by the way, even though I see a bunch of people out there calling this double top pattern. It is not a double top pattern. It is two tops. Based on the close, we should still see higher. Based on the last week's close, we should see still higher sector energy prices. So any pullbacks to me are to be looking for energy plays. Other than that, not much to talk about. Real estate, complete garbage right now. Yes, we could get an oversold bounce especially if the market plays, but this, yeah, there's no great bottoming signal. Also, here's a theme for all the sectors I'm looking at. I'm doing these little harmonic moves. If they've closed below the 62.5 from any retracement swings from a key low to the last key high, it doesn't have to be Thursday, Friday. It has to be from a key swing low to a key swing high. In this instance, it's Thursday or Friday. Any day that's closed below the 62.5, pretty much ruling out, at least in the short term. Why? Because I'd like to focus on the sectors that have not triggered a potential pullback pattern to the downside. Now, any sector I do list that has still closed above the 62.5, but then closes below, like Monday or Tuesday, the 62.5, then it's off the radar screen. I'd rather be very safe than sorry. And if you don't have anything to do right now, then you don't need to do anything. These are not great trading conditions or swing trading conditions. So XLRE, nah. For both the long-term and short-term, nah. XLF has held up. See, still holding key support. Still in sell mode, but holding key support. So I am looking at this very closely. So, and we do, for a quick reminder, on Monday, We had some key earnings on Friday, followed through on Monday. We got Bank of America. I'll show Schwab and there BNY Mellon, some other banks. So pay attention. Then we got after close, we got more banks. So please, and Tuesday, Goldman Sachs before the open, Commerce Bank before the open. So we have some more things that fit into trading and bank related this week. So we could see some key things. Also, here's an example. Key swing low, key swing high, still above the 62.5 on a daily closing basis. So I will look at this sector, especially if we get a market rally on. Now, if we start getting a major market sell-off, everything's off the table besides potentially energy in the very short term. Until we get capitulation, then it will be reevaluated post-capitulation. So XLF is on the table for me. XLK coming down, hitting our next harmonic area. Little bounce back, still in sell mode. From a technology standpoint, let's just take a look. XLK, key swing low, key swing high, above the 62.5. Can I look at technology plays? Yes. We need to get a rally on, especially we need to strengthen up in the NASDAQ. But this is still on the table for short-term plays. That's where we sit. XLI, potential double bottom. This is a valid potential double bottom. It would need a close above 88.58. Then we could return to the longer term areas. On the shorter term, then we're going to assess. Could I look for shorter term plays in here? Why, yes we can. Now, if we get the daily close below 84.50, off until we get stronger price action. If we triggered this potential double, that's stronger price action. But XLI, industrial sector, still fair game. If we start rallying and hold that key S&P level. XLY, consumer discretionary, in sell mode, still holding the June lows. All right. Has this, here's another example. No. Why? Close below 62.5. So this has to show a very good strength before I'm interested. This would be on the bottom of the list. Not quite as bad as real estate, but not the first thing I'm going to turn to. XLP, consumer staples. This one's a different story. It's still in sell mode. Yeah, it's below the June lows. It's trying to bounce back. It found some key resistance, but if we start getting a rally on, I am a little more interested. Why? Now, this last Thursday was not the swing low. The swing lows from Monday to 10th. The swing highs from Friday. 62.5 is right around 67.33. We're still above there, so I will consider this for plays. Especially if we start getting a daily close back above about 68. So we get a daily close above 68, I'm going to start looking at consumer staples even more. Holding right in front of the harmonic, holding up above the 62.5. Yes, it's a long-term sell. So these would be for swing plays, short-term swing plays only. Anything but energy is short-term swing plays only. If you don't trade short-term swing plays, sit on your friggin' hands. Okay, XLV, healthcare. Yes, this is a valid potential double bottom. First and second targets within the move that started it. The trigger would be on a weekly close above 127.55. How about shorter term? This is a sector I will look at. Here's the key swing low, key swing high, Thursday and Friday, well above the 62.5. So I will utilize healthcare for swing trades, especially then if we get you could even on a daily close about 127.55, healthcare becomes a lot more attractive. I will pay attention on a stronger rally though and this isn't just for this week. We still have a key gap left behind and we have the 200 of the sector before the first target on the double. So do keep that in mind. XLB. The materials. What do we have? We have a potential double bottom I will be watching for. It is still in long-term sell. Now, even though we have the potential double bottom, looking at this, daily close below 62.5. Not interested yet. Not interested until something changes, or I would be interested if we did get the close above 72.88. Until that, material select off the table unless something changes. XLC. Now this has been in long-term sell. Communications have been in long-term sell forever. Starting to get slightly interested. Why? Relative strength basis. We see the reversal here and then still above the 62.5 with divergences. We have things like Verizon on Friday, AT&T on Thursday. So there's some things we can look at for potential communications plays. If communications, though, follows through the beginning of this week and closes below this 47.56 level, off the table completely. We hold above there and we starting to get a play back up in the markets. I will glance into communications. Just be aware. I'd rather get into stuff after earnings for AT&T and Verizon, depending on earnings. This is not something I'd rush into with AT&T and Verizon right before earnings, unless there was something with a spectacular options play with interesting volatility. XLU. Remember, shifted to sell mode. So where does it sit? Still above the 62.5. This is really interest rate dependent. So unless we start seeing a rally in the 10-year, or as in a rally in the notes, which would be a decline in yields, I'll get interested if that starts happening and it stays above the 62.5. And that would just be an aggressive bounce play at this point. Nothing else other than that for XLU. XRT, retail. Next one is transportation. IYT. So I should stop putting those back to back. But sell mode, where does it sit? Yeah, that's technically a really sloppy double. Also, for this is the key swing low. This is the key swing high. We are on a closing basis right here below the 62.5. So it's off the table from that perspective. I would only be interested on a daily close above 60.87. So based off this pullback so far, no, it has to show strength by triggering this very sloppy double. Nearly a really weird head and shoulders, but it still qualifies as a double, so that's the way I'm looking at it. Now we're to transportation, IYT. Where does this look at? Coming back down off the lower harmonic. So let's see if we have anything. It's still in sell mode. Now, just because it hit a harmonic does not put it in buy mode. But on a relative performance, well above the 62.5. So can I look at transportation? Yes. No double bottom. You got rotation. So a triple. But if this starts getting back above about 206.65 area, we'll be really start interested in looking for some transportation plays. So that's where that stands. Semiconductors, by the way, finished the long-term head and shoulders. So that is off. However, closing below the 62.5. What does that mean? Now, from a long-term perspective, I'm watching for much lower prices in semis. Short-term, not saying this can't rally. I know we got a lot of semi players who watching here, but look, close below the daily 62.5 on this thing. So this is not a sector I'm looking at right now. Even if it bounces, not interested. Also, just from a support resistance standpoint, what's this? Even on a rally back up, rotation zone, major overhead resistance, just not interested. DBC, DBC still in buy mode from the commodity aspect. Okay, so commodities are still in buy mode. And what's interesting, a lot of energy is you got oil, which is a commodity. So you still have commodity related things in buy mode. So I don't even need to do the 62.5% pullback from that. But if I was looking at it, it would be from the key swing lows at the end of September to the highs last week. And it would still be, even from a short-term pullback level, well above the 62.5. DBA, still in buy mode. GDX, this is interesting. A pullback in gold, but we do now have a potential double bottom. In the short term, what am I going to see? In the short term, nothing. Nothing yet. But in the longer term, I will be keeping an eye on this potential double bottom. If we get a strong rotation in gold back up in gold itself, I will glance in on this sector for some gold miners. VTV, yes, potential double bottom. Need a close above 130.86 from a short term, and this is Vanguard value. So this is based off value plays. Holding up above the 62.5. So both we have a potential medium-term buy, and we have a potential still holding up. So I will look for value plays going in if the markets do hold up and this stays above the 62.5. Finally, and then if we triggered this potential double, we have more strengthened value. Growth, weekly close back below the June lows. In long-term sell, daily close just below the 62.5. So guess what? Growth off the table. Now, if we start getting some kind of rip your face off rallies, I will do a scan to see which kind of growth stocks the market's rushing into. Whether it's junk growth or, as I put it, more sustainable growth. If it's junk growth, that would be just for a very risky short-term bounce play. More sustainable growth would be on a case-by-case basis. So that's where we sit with the overall market. Just remember, the sectors have been beat up pretty hard. From a weekly, let me just refresh this. From the weekly per sector performance, the only thing that held up last week, well, the only two things, we covered healthcare and we have consumer defensive, which are consumer staples. And I already went through, and just from our pure technical aspect, those are two that have held up. So those are key. Financial, even though little negative performance here, minus 0.29, it's still, well, that was one to remember that we could still look at for potential buys. So here, if you just look at that 1 week relative performance plus the additional technical analysis we did they've reinforced each other. Yes, energy had a pullback, but it's still in long-term buy. So that's here. Real estate, even though that did not tank last night, is off the table for me. So this is where it helps to look into not only just, hey, what did it do over our week or even over a day or even over a month, but this is where you have to drill down. You have to drill down into some of those weekly and daily charts to really help refine. So now you have the list. Now I know if we start getting into some rally modes, where are the first things I'll turn to. That's where I'll leave it. Hope everybody can tune into some live streams this week, and I'll talk to everyone later. Bye for now.